Back with you on the Market Day Report. I'm Marlon Bowling with you. Thank you so much for being a part of our day and allowing us to be a part of yours on a Monday. We're watching your ag commodity trade, and let's check in here on the grain prices right now as they stand with live quotes direct from Chicago. Let's go to the corn market first. And on the corn futures, we're maintaining a little firmness here on some short covering action. Apparently this morning we are trading 2 1/4 higher on December. That puts it at 342. March now 2 1/4 higher at 351 3/4. How about that soybean trade? Excuse me, soybeans on November now 3/4 higher. 957.5 is the last trade. 7 cents off our earlier high though. January up 3/4 at 963 3/4. The wheat market is the one that has really taken the spurs to the bulls today. We have the December contract 6 3/4 higher in Chicago at 401.5. March up 6 3/4, and Kansas City has December now trading 2 1/4 higher at 405 1/4. And in Minneapolis spring wheat trade, we have December now 5 higher at 526.5. Let's go to Chicago and join OliverSloup. There he is. He's with iiTrader in Chicago. All right, Oliver, thanks for joining us. Hope you had a good weekend out there.
Yeah, absolutely. We're starting to get that fall weather, which is nice. But a lot of traders, it's a little quiet here. It is Columbus Day, so some of the markets are closed. But the grains still have a little bit of activity today. We do have a USDA report on Wednesday, which I think a lot of people are really anticipating. A couple key technical levels that we're watching very closely going into that. For the corn contract, December, 334.5, 336. That's going to be key support. That's the 50 and 20-day moving average. If we're able to hold that, that should mark higher lows, which could potentially lead us to higher highs. The resistance level, 348 to 350, kind of last week's high, as well as a big psychological level for us. We do have crop progress out after harvest activity, expect to be about 35 to 38% complete. You know, one thing to note is the commitment of traders that we saw on Friday. The funds started reducing a little bit. They bought back about 26,000, but they're still short about 165,000 contracts. So if we're able to get out above technical resistance on a closing basis following this Wednesday's report, I think we could really see those funds start to cover in a little bit bigger of a way.
Well, it's getting that time of year again where you can ski Nebraska because of the large corn piles out there, from what I understand. A lot of photographic evidence of that out there. I guess that's not to be unexpected, right?
Yeah, I think a lot of this crop is being priced in. We're looking at about 173.5 for the yield and just over 15 billion bushels for production. So that's kind of the line in the sand for a lot of traders. We do know there is a lot of grain, but we're also watching South America very closely as they continue to go through planting season. So a lot of different fundamental catalysts as well as the technicals are going to come into play here as we finish out this fourth quarter.
So on Chicago wheat, we're over $4 again this morning over here. What is it that's lifting this wheat market up relative to the other two grains?
You know, we've just been very choppy. We've been consolidating for about the last month, trading in about a 20-25 cent range. And now we've kind of been lingering towards the bottom end of the range here going in to start this session. So we're getting a little bit of reprieve, some short covering ahead of the report on Wednesday, I think. We really want to see a close out above 411 3/4 to 414. That was last week's high, as well as the 50-day moving average. If we're able to get out above there, I think we could really see 425 a lot sooner rather than later. Funds have a record short position. They're about 165,000 contracts short. So as with corn, if we get out above these technical resistance levels, I think we could see them cover in a bigger way. Obviously, a lot of attention on the U.S. dollar as well. It is holding up ground today, and that's not suppressing wheat, which I think is a silver lining in the wheat market as you look a little further out. All
right, currently December U.S. dollar index futures up 210 at 96.770. A quick peek at our cotton futures here on December, and that'll be your new crop month. It's now the lead month, by the way, and now we're 63 points higher at 61 on the early trade here this morning. All right, so we're going to pause for a break, and we'll bring OliverSloup back. We'll talk about livestock when we return right after these messages. Well, we're back with you here on the Market Day Report. We are talking, of course, with OliverSloup of iiTrader in Chicago. And Oliver, I was just looking at my notes here. Before we get into the livestock, if you don't mind, I wanted to pull up our energy prices because they have some of the bigger moves today that we have seen. And looking at the crude oil trade, here on the West Texas Crude. I wanted to get your thoughts on this here. November crude oil now trading $1.60 higher at $51.41 per barrel. That's a pretty big jump all at one time. That's over $2 off of our earlier low now. And if we look at the heating oil trade, of course, that's how we trade diesel fuel these days. November now over 4 cents higher at $1.62 per gallon. Wanted to get your thoughts on this energy market. Is this a one-day fluke here, a one-day wonder, or is this something longer term that you're concerned about?
Well, I don't think it's anything to be concerned about longer term. We've had kind of a throw together OPEC meeting at the end of last month, and now they're having another OPEC meeting with non-OPEC members, including Russia, this week. And the fact that they're able to get Russia into this meeting on a possible production freeze or cut, I think, is really sparking some buying interest or some short covering going into that. I believe that's on Wednesday. And not only that, then we have a final OPEC meeting next month in November. So a lot of OPEC meetings coming together in a very short amount of time is likely to probably end up in a freeze or production cut, which is, goes against the headwinds of what we've seen in the past. We always call them the cartel that cried wolf, because there's always a lot of talk and not a lot of action. But the fact that we're having all these meetings in such a short span of time, I think, indicates that they're looking to cut or freeze production. Interesting.
And some analysts say it has a snowball's chance in southern Texas in July, so we'll see. But let's take a look here at our live cattle trade. Right now on the live cattle market on the futures, we have the December contract now 90 lower at 102.15. So pretty close to the low of the day, actually. We're within about 3 ticks there of our low. February live cattle down 82 at 102.98. Not much cash cattle market activity on Friday, as we just kind of cleaned up from what was left over from Thursday. On a feeder cattle trade, we have the November contract now 37 lower at 122.40. So we're within 40 cents of our low of the day there. We have backed away from our high now by about $1.30. January feeder is currently down 45 at 118.10. So we have been on both sides of unchanged here. In the early going, we were higher. Are you concerned about that fact, that it's kind of giving us a head fake here again today, or not? Because we did close kind of mixed last week.
Yeah, it is a little bit concerning. The morning session started out really well. We were talking with clients right away on the open. We want to get above last week's high, but we really failed out just shy of that in both the live cattle and feeder cattle. Still a lot of trade day left to get out above that, but we're going to want to hold key support. I think if we do get above last week's high, I think you could really see some buyers step into the market, maybe new buyers, as well as some shorts covering their position. So I think if we get out above last week's high, we could make another run, but as it stands right here in the early morning trading, the rollover from the open doesn't look too promising going forward.
Okay, what about on the lean hog side? If we take a look at our futures trade there, there again, that was kind of a mixed bag. Everything was higher except for December on Friday, and that one all by itself went lower by about $0.50. Now you have December down 90 again at 41.70, but most contracts are down this morning. February down 78 at 48.52. It seems like every time you're grasping at straws and you think you can get some traction to the bullish side on the lean hogs, it turns out to be a failure.
Right. Every bounce has been sold into in a big way. So you get the dead cat bounce, and then you get the sellers that step back into the market. I think I mentioned last week a lot of activity in the put options in December, with that 30 strike being the biggest one with the most open interest. I think a lot of traders are still looking for that extra leg lower below that 40 handle. So I think if we break below that, we could make a run towards 30 in a short amount of time. But at some point, I've been saying this for a while, there will be value in this market, but it's about remaining patient. You don't want to try to catch a falling knife. I think if you want to step into the market on the long side, the best way to do so would probably be options.
All right. Well, Oliver, thanks for pointing that out. I appreciate that very much. OliverSloup is with iiTrader in Chicago, and we'll talk to you again soon, I'm sure. So I appreciate all the information. So right now, the hogs about $1.25 off of their earlier high today.
All right. We'll keep watching that. Thank you so much, Markets Editor Marlon Bowling.